What happens when a relatively unknown chipmaker suddenly partners with the most valuable company in the world? Could this alliance push a $24 billion company into the $100 billion club? Is ON Semiconductor the next Nvidia, hiding in plain sight? If you're wondering what this Nvidia partnership actually means for ON Semiconductor, how strong their fundamentals really are, and whether this stock is a smart long-term play in the booming AI economy, you're in the right place. No matter where you're watching from in the world, if you love deep dive financial stories and real investment research, then subscribe to the channel right now and stay ahead of the curve. Let's dive in. ON Semiconductor, or ON for short, isn't a household name like Nvidia or AMD. But quietly, it has become one of the most critical suppliers powering everything from electric vehicles and data centers to industrial automation. This Arizona-based company specializes in intelligent power and sensing technologies. From LiDAR chips in electric vehicles to power management in high-stress environments, ON builds tech that most people never see, but almost everything relies on. Now, with a major strategic collaboration alongside Nvidia, the stakes just got a lot higher. In July 2025, ON Semiconductor announced a partnership with Nvidia to accelerate adoption of 800-volt direct current power solutions for next-gen AI data centers. Why does this matter? Well, AI data centers are exploding in demand and they need faster, cooler, and more energy-efficient infrastructure. Nvidia may lead in chips, but it needs partners for the rest of the power stack. And ON has quietly built best-in-class silicon carbide and power management modules ideal for this transition. This is not just a handshake deal. This is integration into the very core of Nvidia's AI roadmap. Let's talk money. ON reported $1.4 billion in revenue in the first quarter of 2025. That's down 22% year over year, but still beating Wall Street estimates. Free cash flow surged 71% year over year, and the company sits on $3 billion in cash with only $496 million in short-term debt. Over the past decade, ON has grown earnings at nearly 13% compound annual growth rate, and revenue at 7.2%. That's not all. Analysts are giving ON stock a moderate buy rating with a price target as high as $75. That's nearly 30% upside from current levels. But is that price target too conservative, especially with Nvidia now in the picture? ON Semiconductor is not a jack of all trades. It's a master of high-efficiency, high-reliability tech. Its portfolio spans, well, power management chips, which actually make up nearly half of its revenue. Then there are intelligent sensors like radar and LiDAR, used in electric vehicles and factories. And of course, analog and mixed signal chips designed to perform in some pretty harsh environments. And then there's silicon carbide, ON's Moonshot. These next-gen chips are becoming critical for electric vehicles and high-voltage systems. ON is gaining serious traction here, with automakers and now even Nvidia on board. Of course, there are risks. First, ON's core auto business saw some weakness last quarter, and further slowdown could hurt. Its supply chain, with heavy exposure to Taiwan and China, makes it vulnerable to geopolitical tensions. And while the Nvidia partnership is exciting, it's early days. This isn't yet a multi-billion-dollar revenue generator. Investors should also note that ON isn't a dividend stock. It's a pure growth play. So where could ON go from here? Conservative estimate. If earnings grow at 10% and the market rewards it with a stable price-to-earnings ratio, ON could trade in the $70 to $80 range by late 2025. In a bullish scenario with sustained AI tailwinds, rapid adoption of silicon carbide technology, and even deeper integration with Nvidia, ON could really surprise Wall Street, potentially crossing $100 by early 2026. But hey, let's be clear, this isn't a meme stock. This is a calculated bet on the infrastructure powering the AI revolution. So, is ON Semiconductor the next big AI stock that's flying under the radar? Its numbers are pretty solid, the Nvidia partnership is real, and its products are uniquely positioned right at the intersection of energy, automation, and AI. What do you think? Will ON follow Nvidia's growth path, or is this just hype without horsepower? If you found value in this analysis, go ahead and hit that like button and subscribe to the channel. We break down stories that actually matter for long-term investors. No hype, just deep research. Until next time, stay curious, stay informed, and stay invested.